We got a video on AMC today, guys. Welcome to Trap Trades, and today we're going to be going over ticker symbol AMC and ticker symbol GME with a couple different micro and macro updates. But first, I wanted to talk about on Twitter how we blew up this post about a possible inverse head and shoulders on AMC look, where you have the shoulder, the deeper head, and then the shoulder, which is right before this breakout of this wedge formation. And it's in a very, very crucial location right below the 200-day daily EMA, which is tremendous. We talked about multiple times on this channel, getting above $4 could trigger a potential momentum squeeze or a gamma squeeze, as you have a lot of key indicators sitting above $4. You have the Bollinger Bands, you have the 200-day EMA, and then you also have a quarterly MACD curling up, which all looks very, very bullish for AMC. And we're going to get into the micro price action first. On AMC, you closed right at 350, which is a stronger close than I actually anticipated. You are curling up on the 4-hour MACD, which is actually a bullish sign, and your dip was not as low as I thought it would be. Originally, I had anticipated that this uptrend and this bull channel would break down and that you would see a retest of the $3 level because you have a gap down here on the daily chart. Doesn't show it here on the 4-hour, but you do have it on the daily. So that is still very, very possible. However, on the micro, you still look really, really good. You're trading within this bull channel, right? Higher low, higher low, higher high, higher low, higher high. So now if this is the higher low, which it's in a prime spot, this is previous resistance becoming new support, you could expect this to act as a launch pad if this continues to curl up and you get a green cross on the MACD, which would be a beautiful thing for AMC because last time you got a green cross, you went up 16% in one day. And 16% from here takes you dang close. 16% takes you dang close. Takes you to that $4 target, baby. So once you break $4, and if you close and hold $4, that's where it becomes very, very interesting for our girl Amy. Becomes really, really pivotal to hold that level and then retest. So if you look here on the daily, this is the chart that we have made up with multiple gaps above us. And so that's our price targets right now for AMC. You got $12 gap, a $19 gap, and then a $43 gap on AMC. And you are beginning to hit resistance on this long-term macro wedge that you formed back here in 2023 with the downside resistance or support of 250 for that triple bottom. Worst case scenario on AMC is 250. If you were to break this bull trend and then this uptrend, that's likely where you would be going to visit. However, first things first, very, very crucial that we cover the 200-day EMA being at $3.85. That is going to be one of the most important battles for price that you've had since the 801 battle, because the 200-day EMA has acted as an absolute wrecking ball to the AMC price. You can see that you got stopped out literally pitch perfect. Got stopped out pitch perfect on the 200-day EMA, almost to the cent. Got stopped out right below you dumped, somewhere like 70%. Last time you were able to successfully close above was 7/24/23. So 2 years ago, you have not been able to successfully close above this thing for 2 years. So if you're able to do that, that is a big, big deal. And people aren't talking about it now, but they will be once that happens, because that is a significant bullish indicator for a potential bottoming formation here. When you look at AMC, you're forming a double bottom pattern similarly to what you got in 2021. A double bottom pattern into a squeeze that took you into a accumulation up to June. And then you got this horrendous chop. I mean, just wicked, wicked, wicked. But now this is where the opportunity is to buy shares at an all-time low coming out of that double bottom formation. And I really, really do believe that this is going to happen because of this inverse head and shoulders here. Because the price target, if you did not know, you take from the bottom to the neckline and then you put it on top of the breakout, which on top of the neckline would be right around that $5.50. Now, I could see us finding resistance at $5.50. I could see us stopping our short-term run there. But now what does that do to the long term? Well, long term, that breaks you out of this wedge formation that gets you above the 200-day EMA, right? And then beyond that, on the monthly for the Bollinger Bands, that would put you right at that upper band, which if you watched our video yesterday going over Dogecoin and AMC and kind of comparing the two Bollinger Bands, once you hit that top band, what you'll start to see is these tight Bollinger Bands, the rubber band that's been stretched for months and months and months, 2 years, 3 years, will begin to bulge the same way that it did here once you see volatility. And when it begins to bulge outwards, you will see AMC stock begin to rise again. Fundamentals or not, this chart is set up to do something very, very volatile, whether it be up or down. I just happen to be making the case that it's going to happen up. So AMC looks primed on the daily, on the monthly. And then in case you haven't seen the last couple videos, we went over the quarterly MACD and the implications that has, right? You're curling up on the quarterly MACD, one of the largest time frames, which would imply some of the largest volatility for the first time since 12/31, so almost January 2020, right? And the market itself, the market sentiment, you can feel is beginning to warm up towards risk on assets. You can begin to see meme stock craze. You can even look over here in the news articles. You know, as soon as they start to write the news articles, that the shift in sentiment is changing. You can see companies like GoPro, companies like, what was that one called? Someone said something about it in a recent video. I can't recall what the company was, but GoPro is an amazing example today, up like almost 200%, 50% on the day alone. When these things start to happen, it becomes a trickling effect that the market's at all-time highs. People who took a short all the way back during April when the tariff situation happened are now drowning underwater and they have to cover. And so you might see short-term relief here for AMC back up to 16. If you break through that, 19, 43. I mean, this thing could snowball and get stupid really, really fast. And so that's why I love AMC as a small risk, high reward play. If you keep your stop loss tight, you have to be careful. But going into GameStop here, our boy Jimmy, GameStop looks really, really good for volatility as well. And I don't think it's a mistake that these two stocks are coming to the end of their formation, end of their pennant or their wedge at the exact same time. When you look at GameStop, you had this fake out breakout, right? And then you dumped back down to the bottom of this trend. Now you are breaking out of this bear channel, which typically doesn't happen, but when it does happen, you could see significant upside to fill this gap if you can break the most important trend line on GameStop since the April squeeze. This trend line goes all the way back to June of last year. You rejected it in December, January, March, April, broke it in May, dumped back down, and now you're testing it again. And so there's a lot of key things that you want to see here. You want to see how GameStop reacts to this. You printed a doji today. If you open tomorrow above this trend line, I would expect a significant move next week. Like it will take AMC and the entire meme basket with it, because a break above this trend and a gap fill, you're looking to break this bull flag, which has a profit target up here at $111. You have a gap fill at $76, $78, which GameStop has literally filled every single gap since its inception, except for the gap above you on the daily, currently at, I think it's like $28, currently at $28.42, and the gap above you at $78. So it doesn't take a scientist to think that this thing is ready to rock, regardless of this death cross on the daily. I think this is a absolute bear trap, and I think shorts are about to get absolutely cooked. I think they're about to get bamboozled, which is a beautiful thing, because then we win. Then we flourish, because a lot of the risk-on assets are going to begin to squeeze upwards towards the end of this market cycle, which is a beautiful, beautiful thing for retail. And I hope everyone can make it out alive. You take profit, you better yourself, you compound, and then you do it again and again and again. And it's a beautiful thing. It's a beautiful, beautiful thing. Last thing on GameStop, and then we'll wrap it up here, guys. I'd like to see this weekly MACD begin to curl up on GameStop. If you see this begin to curl up, and it looks like it's doing it. It looks like you're beginning to curl up here on the weekly MACD. What I'd like to see is a further print up and a break and a close above this 50-day EMA. And for me, that would confirm a GME breakout and further upside to fill that gap at $28. If you do so, it's literally printing free money for GameStop, for AMC. So not financial advice. Do what you want. But I think it all looks really, really primed here. And this is just also reflecting back to the Twitter post that I had posted going over the inverse head and shoulders as well on GameStop. There's so many good things to like about this chart. This bull flag that you're in, the inverse head and shoulders. So shoulder, dump, head, support, shoulder, and then a potential rise with this confluence trend line up to $110. Make you holler, baby. I am so jacked. I'm so excited. So if you guys are excited too, please, please, please share the content, like the content, and please follow for more. I'm going to be covering this entire move that hopefully we will see. And if you do dump, I'll give you price targets to collect more shares. Not financial advice, guys. God bless. Have a wonderful rest of your day, and peace.